I think there are a couple of elements that can justify the motivation of retail CBDCs. The first element will be technological, and the second one will be commercial. So financial institutions, developers, and consumers, they recognize today the value of blockchain technology and programmable money. This is not something that can be re-questioned anymore. Everybody agrees that this is the next evolution of our current financial system infrastructure. Settlements happen in seconds, distributed infrastructure is highly resilient, and creating and transferring money is now very cheap compared to what we know so far, right? So as part of my experience with Consensus, I have the opportunity to work with central bank, especially in the GCC region, and also with commercial bank and payment service providers. And all of them are implementing projects at the moment that tackle all the value chain of the money. We are talking from wholesale CBDCs, we are talking about delivery versus payment, we are talking about cross-border payment, and finally, we are talking about retail CBDC. So definitively, if you're experimenting all of this, you need to tackle the topic of retail CBDC. Just from a technological point of view, it does make sense. The second reason, as I said, is commercial. So just to give you a figure, in 2021, there were more US dollars that transitioned through the Ethereum network compared to the Visa network. The shift is happening. The adoption of decentralized finance is going mainstream, and consumers today, they have access to more financial services offering and product, more access to sophisticated product that compared to what the central finance world could offer today, right? So today, people have a choice between state-backed money, they can use their regular money, or they can use digital money, and they can use cryptocurrencies. They have a choice between both. At that stage, or where we are in 2022, this is not a question of if, but this is a question of when retail CBDC will go mainstream, and central banks at that stage, I think they have just no choice in moving forward with retail CBDCs.
Thanks, Ziad. And Caroline, if I can come over to you next. I mean, Ziad gave a great explanation as to why retail CBDCs, but why central bank digital currencies? Why not just stablecoins?
I guess if we think about traditional financial system, I think we can see that it's really not a choice between one and the other. We don't need to choose whether we have retail CBDC or any form of CBDC, in fact, and stable coins. Even today in the financial system, the traditional financial system, we have a system of public and private money. Most of us, most of the time, are in fact using private money, but that is obviously supported by the public money infrastructure behind it. And we can sort of see in sort of the digital world a similar system, a parallel system actually evolving. I think what's most important is that we make sure that there are the options in place for consumers so that value is able to move as efficiently as information moves today on the internet. And I think from our perspective at Chainalysis, what that really requires is very sort of forward-looking regulation, proportionate regulation, and ultimately a collaboration between the public and private sector. This is not a space which is going to be the domain of one or the other. It is very much a partnership between the two parts and very essential parts of the economy. And I think that's the sort of future we're looking towards rather than a sort of a choice between one and the other.
Thanks, Caroline. And Jack, if I come over to you now and we shift focus from the motivation for a retail CBDC and move towards some of the issues of implementation. You're quite close to a number of projects here. What are the issues that you're seeing, particularly on the retail CBDC side of things?
Thanks, that's a great question. So I think I would start this from taking a step back and thinking, what is retail CBDC? And ultimately, it is a product, it is a payment product. And it is a payment product that exists not in isolation. It's opposite current cash payments, it's opposite current sort of private money allocations, as kind of Caroline's talked to, whether it's debit cards or credit cards. If you're looking for a successful adoption of CBDC, you need to make it something that the public are actually wanting to have and willing to accept. Otherwise, there's an awful lot of effort that's going to go into something that gets little adoption. And therefore, I think, that's where we need to start with some of these things. Ziad's talked about some of the motivations for central bank digital currency, and I think that's really where we then derive what some of the requirements for it might be. For instance, we work with the Swedish Central Bank on the e-krona project. One of their motivations is the provision of central bank money, central bank liabilities to the public. That's fulfilling their mandate as a central bank. And their investigation of CBDC is about fulfilling that. Now we have other projects, for instance in Kazakhstan, where one of the projects where it's really about kind of the next generation of payment rails and thinking about how you could use programmable money. Those are completely different motivations, and they also, as a result, derive up entirely different requirements that the technology has to meet. So I think over the next sort of 12 months or so, what we'll see is a kind of maturing and better understanding from central banks as to what they want to achieve, and then a better, clearer set of requirements to give to the private sector to then go ahead and deliver something for them.
Yeah, thanks, Jack. I think that's interesting. And Ziad, if I come back to you just quickly here, just on that programmable money comment that Jack made, I know that that's something that you're particularly interested in too. How does that fit in trying to get that message across, certainly to policymakers? Because it's quite an intangible concept. You know, we can all understand faster payments, cheaper payments, but programmable money, what does that mean, and how do we get that across?
So I will say the academic definition of programmable money will be that it's a piece of software that allows you to program money or to pre-code money with an inherent logic behind it. So through history, our money was just only a mean of exchange of value. And even the digital currencies that you have today, or even the money that is distributed from a central bank to a commercial bank, is solely a piece of code but has a one-to-one relationship, and that's pretty much it. And you cannot code certain logics into it. With programmable money, you can set up some parameters that allows you basically to accelerate the distribution of money. Let's look at the consumer, for example. We all have here, I believe, maybe a checking account, except the crypto maximalists who are living off the grid. But if you have a checking account today in a bank, the amount of physical and technological resources that it takes to maintain that checking account costs a lot of money. When you program it in a smart contract, it does exactly the same purpose without 90% of resources that is required to make the same thing. So programmable money, from a technological point of view, brings a lot of efficiencies and an increase of security for the banks and the central banks and the payment service provider. This is a true game changer from a technological standpoint. And then after that, all these resources that you're having today dedicated to maintain these legacy systems can be dedicated in actually creating more value, more financial product, new ways of thinking finance. That's the beauty of programmable money.
Excellent. No, thank you. One of the things that we have to think about, as well as that implementation issue, is some of the policy considerations around that. And one that certainly comes to mind from me is one around privacy. I think that's a big topic around implementing a retail CBDC and it being successfully adopted. So Caroline, if I come over to you first, and then Patrick, I want to come over to you second on that. What are some of the issues that we think about balancing privacy with retail CBDCs?
Yeah, so look, it is, I guess, a tricky question. And on one hand, we have a lot of governments around the world have made clear that they want to maintain some of the privacy-preserving features that we have with cash for today. But at the same time, certainly no one wants to see a CBDC used for things like money laundering, financing of terrorism, and so forth. So how do you strike that balance between, you know, having the privacy of the ultimate user, but also ensuring that it's not used for illicit purposes? And I think, you know, it's easy to be confused between, we talk about sort of blockchains and we talk about how they're transparent and public and everyone can see the transactions on them. And we also talk about the anonymity of different cryptocurrencies, for example, or the pseudonymity. And I think there is a way to sort of breach this gap, and it really comes down to, I think, having a good understanding of the technology. And maybe I can just give a very concrete example. If I think about the work we do at Chainalysis, it's very much focused on, if we have, you know, the world of blockchain as a map, but it's a map without any street signs, without any signs on any of the buildings to tell you what they actually are. what we do is actually work to provide that data overlay of and the analytics, which allowed the transactions going between different wallets, different services to be identified. We allow the identification of those services, for example, to know that somebody, a particular wallet is dealing with an exchange, for example. But that doesn't mean that we know the identity of the people behind that particular wallet. And that's where the other parts of the ecosystem, like your virtual asset service providers, your exchanges and so forth, they're actually the sort of repository of that information. And so I think there are ways that we can balance through using the different players in the ecosystem, governments, service providers, the end user, and the fact that you do have a public system where you can see the whole world of the transactions, but without necessarily being able to see right through to, for example, the identity of the person behind those transactions. And so I think there are sort of technological solutions that can facilitate reaching the right balance according to the particular context that's needed.
Absolutely, and I think that's actually probably at the heart of the crypto debate more generally, right? There's the technological solutions that are there, but it's about how we're able to represent that to policymakers and regulators to be able to understand where the technological solutions are in relation to the regulations and the regulatory outcomes that we're expecting. So Patrick, if I come over to you on that point, how do we do that? What's the best way in which we bridge that gap?
Well, there's no easy answer. I can start there. We're a company that has sort of dedicated itself to programmable money, programmable digital securities, really around that compliance piece. The challenge is that it's not just compliance regulations that we know of today. There's a whole lot of other things that can be programmed in, and you see this in certain places, in China, for example, where it's deployed to enforce certain social policies, right? And that is where we start to get into some really sort of difficult territory because it is an incredibly powerful tool. And when you think about, as technologists, I always say, we don't have the luxury, if you're working and developing something that is very powerful, you don't have the luxury of assuming that it will always be used for something, noble and beneficial. You have to also contemplate, the dangerous uses of that technology as well. What we're hearing here is all of the incredible technological things that can be done, but then it's up to policymakers and societies to understand really how to use it in a way that, one, preserves privacy, two, promotes, social goods that are agreed by all, and there, it's sort of, I guess maybe a little counterintuitive that while we focus on really, and I think we're a global leader in thinking about how to program compliance into these assets, at the same time, when I think about CBDC, I think probably a retail solution allows for better and more logical experimentation than a very heavy-handed, central bank retail solution. We're all in favor of central bank wholesale, but we think that there's probably, more benefit to the experimentation around a retail, digital currency, and just really because of the necessity of getting the policy right. And sometimes a small group of people don't necessarily address all of the questions that need to be addressed.
Absolutely. And actually, just on that point, Caroline, I want to come back to you because I know you set up the Blockchain Center at the OECD before. So if you could kind of outline some of the issues that you were trying to address there, because I think Patrick raises the kind of the point in terms of the need for that and how it's represented and the experimentation phase. But if you can kind of say how you try to deal with that from a policymaker's side and standards setting side.
Yeah, look, I think there's a couple of components, and one of those is simply sort of the education piece, and I think there's a lot of responsibility in the industry. You have a lot of sort of the technological development happening in industry, but a lot of the policy expertise, and I appreciate the point that Patrick made that, these two worlds can't coexist, policy and technology. We very much need to have them working together, just as the public and private sector need to work together. So this sort of education process, I think, is certainly step one, and that's a big part of the work that we did at the OECD under the Blockchain Policy Center. But secondly, I think is also very practical implementation, it's very hard to really understand and sort of grasp all the implications if you're not sort of building projects together in partnership. And that's really essential to make sure that everybody sort of really understands sort of end to end what are the different implications of these different models that are being considered, because it's absolutely true to say that sort of it's historically the role of central banks has been the interface with the retail banks. They haven't gone to, other than cash, but they don't take that ultimate step to deal directly with users, certainly when it comes to e-money, electronic money. But some of the models that are being proposed do look at models like that, or with some sort of intermediary in place, but ultimately having access to the retail level of digital currency. And those are very different models, and I think we're not going to really understand all the issues if we just think about them theoretically. I would love to see more projects which are very much focused on sort of practical collaborations that bring in different people from the ecosystem, different stakeholder groups, to actually understand what the implications are more broadly.
Thanks, Caroline. And I think that brings us quite neatly over to Jack here on the projects that you've seen. I know you've been involved in a number of CBDC projects globally, and you've mentioned a couple earlier about Sweden and Kazakhstan. But kind of looking forward and seeing where those projects are quite far down the line, have kind of overcome some of the hurdles, perhaps gone into the kind of proof of concept stage. Perhaps you can talk a bit about that, and then maybe also comment on where you think and the kind of first proper rollout with wide-scale adoption of retail CBDC will be, and potentially when too.
Sure, that's a good question. I think you're right. It's difficult to talk on this subject and give a kind of overview of global activity, because quite quickly you talk inaccurately, because there is such a range of activity and a different sort of set of approaches that are being taken. So there are some nations that are taking a sort of almost a tech-led approach, thinking about, kind of motivated by the kind of opportunities that Ziad has spoken to, and Patrick as well, about what the potential of DLT is. And then there are other central banks, and this is a somewhat crude binary, taking it from a kind of policy perspective and economic perspective, and kind of starting there and working towards their requirements. I don't think there's any one good or bad way. I think ultimately, though, and as Caroline has sort of talked to, they need to meet and they need to have those conversations. And I think what's been great for the position I've been sat in for the last kind of couple of years has been the path that CBD has taken from innovation teams in central banks into payments teams and into real sort of market activity. And that, for me, is an indicator that this is going well, in short, because we are moving from sort of toy projects into real projects, and the projects are being asked serious questions that the payments teams are putting to it. So, you asked me earlier today when I thought that the first one would appear, and I said maybe in 24 months, sort of with a pinch of salt as a timeline. And I think that isn't a timeline that is too ambitious for some nations. I think that's the pace that some nations want to work at. I think it's a pace that some nations can work to, given their local stakeholder groups. I think in perhaps other nations, the UK and the European Union, those that are closer to where I am geographically, they've set out a roadmap that is, 3 to 8 years, and they've got a very complicated stakeholder group to manage. That isn't the same elsewhere, and doesn't need to slow everyone else down. So 2 years maybe with a pinch of salt and a fair wind.
And where do you think that'll be?
Good question. So, I mean, if I think about some of the progress that's been made in the APAC region, principally with regards to the wholesale, I think that some of the motivations that we've heard from today, but also if you think about the existing payments infrastructure that exists in some of those nations, there is a clearer case for retail. It looks a bit like kind of how do we just, there's an RTGS renewal coming up. What do we put in place of it? How do we think about these things? I think APAC's got a good place. I think the Middle East is also well positioned, and certainly we're seeing a lot of a desire to kind of pick up the pace in the Middle East. So certainly not far behind either.
Thanks, Shaq. I'm conscious that we're running out of time. I'm being flagged down to finish the panel. But Patrick, I just want to come over to you to finish things off. The UAE, will we see a retail CBDC rollout in the UAE?
Well, look, it's hard to say. I mean, there's certainly been a lot of work done in that space. The Aber project with Saudi Arabia. I know there's been a lot of work, sort of collaborative work with governments in Asia, China, Thailand, and others. So there's certainly a foundation being laid for, at the very least, a wholesale. Whether that's going to translate into a retail within the next, decade, I think is less of a function of the UAE thinking about it in isolation than it is how they see that interacting with other developments globally. So it's hard to say. It wouldn't surprise me if there were one within the next 5-6 years, because a foundation has been laid. But my crystal ball doesn't see that far out right now. So.
Excellent. Well, look, this is all we've got time for in this panel today. I'd just like to thank you very much for my panel, Caroline, Ziad, Patrick, and Jack, and I hope you've enjoyed the session. Thank you.